Hey everybody, Economic Ninja here. I hope you're doing well. I'm doing okay. I'm coming to you from the creepiest hotel room in the world. That's right. It's not the best, I gotta admit. The lighting's not off, and so we're gonna call it Creepy Ninja because I've got a light underneath me. But you know what? You're not here to see me. You're here to see the markets. We're gonna jump right in. We're gonna share the screen, and we are gonna talk. We're gonna go to CNBC, and we're seeing carnage right now. Carnage! Cue the fire, as Johnny B would put it. Dow Jones is off almost 1,000 points right now, and I want to make some points. There's a lot of things we're going to go through, but first off, let's see what they say, all right? Because it's always fun to watch the narrative. Dow tumbles 1,000 points, NASDAQ drops more than 4% as Wall Street sell-off intensifies. Now, yesterday we had some euphoria because we were seeing the markets react to that 50 basis point hike. Sorry, the ninja's not had his coffee yet. And it was only up, when I did the video yesterday, it was only up 100 points. But then what happened was Powell said, people were asking questions about the next one being even bigger. A lot of analysts were saying, hey, we think that we're going to see a 75 basis point hike in June. And Powell essentially said, this is the top, like we're not going to go higher than that. And what we saw is we saw the stock market just take off and rally. And this is what I was saying about a week ago, where I believe that actually, quite frankly, the Fed is not going to be able to get rates above 1%. Even if they hit 1.25, that's going to be the top. I believe the Fed is going to do an about turn and the markets are going to have this euphoric moment. And what I believe is going to cause that is two things. Either they try and fail, or what happens is very soon, if more of this market carnage keeps going and we see these continual, 400-point drops, 1,000-point drops in the stock market, the Federal Reserve is going to do an about face. And they're going to say, you know what, we need to hold off on these rate hikes because we're trying to stabilize the markets. And then we're going to see an absolute explosion in the markets. All right. Now, first off, don't take any of this as financial advice, trading advice. I'm just a dude with a bro hawk and a dream, needing a coffee and a nicer hotel room. But I digress. So let's talk a little bit more about some other things going on in the market. Grab my mouse. Okay, so another thing that's been an issue right now is gold. People have been asking, well, why has gold been selling off? Gold was bumping $2,000 just, the last few weeks. And then we saw this massive sell-off, like $150 an ounce. And so let me explain that. The DXY, which is an indicator of the dollar strength relative to other currencies, and primarily its heaviest weighting is the euro, okay? It was bumping mid 103 frame. And I was talking to my buddy Crypto Charts Joe, and he said, hey, if you go all the way back to 1999 on the Dixie chart, the DXY, really the ceiling is around 104.5, 104.65, I think was the ceiling on the DXY. He says for it to bust through that, it would have to be really, really something amazing. Like the Federal Reserve came out and said, we're spiking rates to, 4%, 3% or something like that, to where, the dollar would all of a sudden have some imaginary value, get some kind of rate of return, and people would be diving into it, and the DXY would spike. But what happened was yesterday we saw when Chairman Powell came out and the DXY was strong, and he said, you know what, we're not going to be raising over 50 basis points. That's sort of like, that's our ceiling. We saw the DXY just drop, and it dropped hard. It had I don't know, was it a 15-minute or 30-minute candle that was, I think it brought it down to like 102, 101, around there. Don't quote me on this. I glanced at it yesterday. And we saw gold and silver immediately react, and both of those shot up to the upside. Now, gold and silver right now are off their highs in the day for the trading, but it is interesting because look at today's narrative. Gold extends gains on inflation concerns post-Fed-led boost. All right. Now, something else I want to draw your attention to is down here, and that's Shopify stock is down 17% today alone after earnings miss. All right. This is going to be what you're going to see more and more often. And we've been seeing this over the last couple of weeks during earnings season, where all of these amazingly smart analysts that come out with numbers and they get paid the big bucks to tell you where they believe the stocks are going, they're 100% wrong. So as of right now, I would consider an analyst about as good as a weatherman. These are going to continue to drop because you're seeing more and more that people do not have the discretionary spending that they did a year ago. And remember, a lot of this stimulus over the last year was fake because of government intervention in the form of stimulus checks, low interest rates, things like that. Okay, so all this fake stuff that pumped the markets up for the last year and a half, 2 years is now going away. All right, and reality setting in, and the party's over, and the hangover has now come in. Okay, so that is very, very important for people to understand. Now, this is the most exciting news of the day for me. You guys know that I've been waiting for a real estate collapse, and even though it's happening before our eyes, where sales are absolutely just cratering right now, what is happening is the 10-year just totally blew past the 3% mark. And if you guys remember, a couple days ago, I did a video where when we hit 3, I said it's going to come back down a little bit, and then it's going to start shooting off again. Remember too, the price of the bonds are going down, but the yield is going higher. And the reason why is because people are afraid. They're afraid that the market is crashing. They do not want to tie their money up for a long period of time. So institutions that need to sell bonds to raise money, they are now having to offer a higher interest rate, a higher yield, just to get you to lock your money up. And quite frankly, at 3%, I still wouldn't lock my money up for 10 years, okay? I do not feel that that is a good deal, okay? Because when you lock it up and the yield keeps going up, the price of the bond you bought is going down in value, and you're stuck with the yields. I'm not a big fan of bonds right now. We are in a bond crash. We've been in a massive bond boom, a bull market. So that's not my thing. Again, guys, this isn't financial advice. All right, so now we're going to dive into something else. We're going to go into oil. Now, what I also find very interesting, and something, guys, that I was talking about, oh gosh, when oil hit 120 to 130, I said, get ready for it to pull back, okay? Because a lot of it was news driven, because it was based off of the movements of Russia going into Ukraine. And now we see oil sitting at a 108. Earlier today, it was sitting at 109, okay? I believe that we are now seeing the rise of oil again. I believe that we are gonna see oil this year blow past its all-time high, especially as we move into the summer months, where people are driving more, there's more activity worldwide, and that is going to be that. And you got to see the story here. The narrative is oil climbs on supply jitters as EU lays out Russian oil ban. I want people to understand this. That is a narrative, and it is the most idiotic narrative ever, because, you know, the EU can play tough like Germany played tough, but they are so dependent on Russian oil, it is insane. And the facts are, if they go through with this, which I believe they're dumb enough to do it, they're going to find themselves in a position where they're buying oil at insanely high prices. And that is going to, these actions are what is going to help pump oil past its all-time high. Okay, I want to say it's 136, 138. I don't remember. Again, guys, I don't use a teleprompter. So yeah, that's pretty much it. I wanted to bring you this sort of roundabout thing. And remember, as everything happens, let's you know what, let's stop sharing and bring you straight back to full screen creepy mode. I hope you guys are having a good time. Seriously, everyone I'm staying with keeps complaining about these rooms. They're horrible. I should be a hotel, what is it? You rate hotels. Hotel rooms by the ninja. Guys, the point is this is actually good news. When you're prepared, you're not scared, and you actually get excited about these times. Now, is it all going to drop at once and you guys are going to go pick up homes cheap and cars cheap? No, it takes quite some time. This is the long game. This takes patience and perseverance. But the more patience and perseverance you have, it means you are going to be able to take advantage of the best pricing out there when it comes to investing. All right. So you want to pick your stocks right. You want to hedge against inflation right with, your precious metals. When you have your real estate, you want the key properties. If you have properties right now that are always been trouble properties and the margins aren't that high, man, you know what? As a real estate agent, but also as an investment professional, you may want to consider consolidating some of your real estate holdings and go, you know what, that one just hasn't always performed. It doesn't have the highest margins. Why don't I go ahead and sell it, take the profits and dump it into or pay off one of my higher margin houses? Then it even increases my cash flow. Many people don't think about it that way. Then you've now reduced your exposure on a dollar basis. When you add up all the value in your real estate, you reduce that exposure. to your portfolio, and you actually increase a lot of times your cash flow on a percentage basis. It's actually a really neat, very simple way of going through your real estate portfolio and fixing it. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.